Let's get in the management of Sterlite Tech though. They join us right now on the show. Joining us is the Chief Financial Officer, Mr. Anupam Jindal. Mr. Jindal, thanks so much for taking the time out and speaking with us at Bloomberg Quint. Satisfactory quarter, you would say? I mean, I'm not surprised with the order bookings and the order book that you're sitting at. Yeah, I think in the month of February, you won this large system integration order from the Indian Navy, which was, I think, to the tune of 3,500 crores any which ways. But how has the execution in the quarter been like?
Yeah, this is the fantastic quarter we have finished the year with. We have delivered the best ever year, finishing almost like $500 million kind of revenue, 3,200 crore, which is though 24% growth year on year. But in terms of EBITDA, we have closed the year with 789 crore versus 542 last year, reflecting 45% growth. Coming to the quarter, this quarter was 238 crore EBITDA versus last year of 166, so again 44%. But more importantly, this PAT has come out really well. We have crossed 112 crore of PAT in the quarter, again versus Q4 of last year 64 crore, so 77% jump. And the same is the trend in the annual number also, which is 334 crore of PAT against 201. So I would say pretty good quarter, more than satisfactory. The order book is also at all-time high at 5,200 crore. This does not include the 3,500 crore APO which you mentioned just now, because that is still at advance purchase order, and we'll await the PO when it comes. We'll add that. So excluding that also, if you look at this, is very healthy order book. We are starting the new year FY19. So overall, all in all, great performance from our side.
While we'll talk about the quarter, I'm just wondering, so the Navy order that you mentioned, is it still 50-50 whether you get it or no, or are you just waiting for the PO to come in?
I have received the formal advance purchase order, which means that the formal purchase order will still take some time, so we are not having any doubt about it.
Okay.
But until it comes, we don't include that in the order book.
Okay, fair call. Just one question on the operational picture as well. The expectations were that you will nudge about the 22.5 EBITDA margin number for the year. Have you been able to do that?
So the full year EBITDA margins are at about 25%, well about 22.5%. Last year we were at about 21%, so a significant improvement on that EBITDA margin. But from our perspective, we look at absolute EBITDA, because our EBITDA margins are functions of the products business, which are high margin business, and the services and system integration business, which are relatively lower margin. So I would say the margins have also gone up, reflecting very good operating leverage. We are operating at almost 100% capacity utilization for both our fiber and fiber cable facility. So this is giving us this edge on EBITDA margin.
Mr. Jindal, your revenues from the export market, they've increased. If I look at FY18, I guess the contribution was 54% versus 37% I was seeing for FY17. Do you think this number can go higher, or you'll sustain these numbers in FY19?
See, our objective continue to be pushing ourselves in the external market outside India, and that will continue. As a percentage to revenue, depending on how we shape up in terms of the service business going forward, the percentage of export may switch, but absolute number of export, which has grown from almost 950 crore in last year to about 1,700 crore in the current year, 18. So that will continue. So I would say that our export number as an absolute number will continue to increase. As a percentage, I can't really commit, but yeah, I mean, we are currently looking at maintaining that 45-50% kind of share.
Okay, 45 to 50%. I'm also going through your press release, Mr. Jindal. Return ratios have improved substantially. ROC at 30%, ROE at 28%. Net debt to equity has also fallen below the mark of 1. Are these ratios sustainable now if one has to look at, a time horizon of next 2 to 3 years?
Yeah, so we have always communicated that we strive to keep our ROC well about 20%. This year we have marked that 30% mark also. I mean, we have broken that path to reach 30%. Now, in terms of sustainability, yes, we would like to keep it about 25% for sure, having delivered a significant jump. As you know, we are in the middle of expansion. We are increasing our fiber cable capacity from 30 million to 50 million. And as that capacity comes up, our capital employed might go up, and we may find some blip in terms of ROC coming down to maybe 25-26%. But I would say, I mean, on a long-term basis, 3-year basis, I would be able to reach 30% or maintain that number.
Anupam, a couple of things. You know, the last time that I was speaking to Anand, he was talking about a fair bit of optimism on multiple business verticals and not just the optic fiber laying out, because you guys are taking up maintenance contracts, smart cities are coming into play. I also read the release that you came out of the Bloomberg terminal along with the results that you were seeing a massive growth over the next 10 years on the optic fiber outlay as well. Can you qualify this? One thing is to say that it's going to be a good growth. The second thing is to try and put some perspective out here. I know you're working with about $100 million profit number in the next 2 years. What about the revenue numbers? You've clocked in about 3,200, which is a good growth. What's the kind of outlay that you're giving out for, say, FY19 or FY18?
So we are not really giving any short-term or annual guidance here, but the long-term guidance we stick to, and we are more than confident about reaching there. In terms of the reference we're giving about Anand's discussion, I would say that yes, with the onset of 5G happening or starting to happen in most of the countries, I think it's a very long-term growth we can see in fiber. We had seen 3G and 4G deployment happening in a massive manner, and 5G is going to be, I think, significantly higher, maybe 2 to 3 times higher than what it happened in 4G. And that way it's going to be quite long-term, maybe longer than 5-6 year cycle. And along with that, the deployment opportunities are going to come. And we are currently looking at, while on the product side, we continue to be a global company, global footprint. But on the deployment side, we are focused right now in India. And we see massive opportunities coming up. In terms of giving any revenue number, again, very difficult because service business is going to play a major role in that. But I think from products perspective, we will continue to have a significant growth just in terms of volume, like we are doing 30 million roughly around, and we are going to achieve 50 million by June 2019. So that itself will be huge growth, 66% volume growth if we are able to achieve by June 19. So that kind of will reflect in our revenue growth as well.
But which allows you to do a bare minimum 20% revenue growth at least YOY. I'm not asking for a particular number, but would you believe 20-25% is a given?
Yeah, 5-year history shows that we have delivered 24% revenue growth, 29 in fact, 29% revenue growth, and I'm more than certain that we can do that kind of growth in revenue. But our focus continues to be the quality of earning, which has grown by about 45% YOY over last 5 years, and reflecting into better profit after tax delivery. So I think from absolute EBITDA perspective, absolute revenue perspective, yes, revenue growth will be in excess of 20%. EBITDA growth is going to be much higher, and then PAT anyway, as you said, 100 million, which we had talked about for FY20, continues to be on track.
Anupam, you spoke about the product side of the business. I'm just looking at the breakup. Nearly 80% of your order book is coming from that side. Do you see the services pie increasing in FY19?
It will increase definitely, as we are saying that this 3,500 crore, once it converts into formal order, it will sit in that order book. Part of it will get executed in the current year as well. On the top of that, we will have some more opportunities which we have bidded once they get formalized, and we get some opportunities from there. So the service business is also going to increase. It's the order book generally is very lumpy. We get order of a bulk size once in a while, and then that sits in the order book. But very positive point for us, and which is very good point for us, is that the product order book continues to grow, and most of it is coming from outside India. Typically, traditionally, that order book used to be very small, maybe just about a quarter kind of revenue. But if you look at that number today, it's crossing more than a year or maybe 1.5 years. So that gives us great comfort that the company's position among the customer, and that too at global level, is changing significantly.
Last couple of questions really. One is, when does the capacity come on stream? I believe your uptick in ROE is closely linked to that. So the timelines would be important here.
So by June 2019, we will have the 50 million fully commissioned.
Okay.
And in between, we are expecting by close of the current calendar, that is by November to December 2018, we are expecting to reach by 40 million.
Okay. Last question from my end at least. The last 4 years or 5 years, Sterlite Tech has been a story, amongst other things, of significant debt repayment as well. Where does that stand right now? And but does it see any kind of an uptick over the next couple of years because of the capex?
Yeah, so currently we are sitting at a net debt of about 890 crore roughly, and which is, as you said, in terms of net debt to equity, we are at 0.7, well below 1. Now, in terms of absolute debt, the number can definitely vary depending on our growth from revenue and growth in our capex program which we are doing. But in terms of debt to equity, I would say we would continue to be below 1 for these organic plans which we have embarked upon.
Okay. Anupam, congratulations on a good quarter. Thanks so much for taking the time out and speaking with us.
Thanks.
The stock though ending about 5% lower. Tejas Networks, similar player, also ended down. Although the numbers of Sterlite Tech seem reasonably okay, but for the fact that people would believe that 20% revenue growth for the quarter is slightly lower than what they do on average. Remember, the last 4 or 5 years they've actually clocked in a CAGR revenue growth of about 26-27%. So this quarter's revenue growth number may be slightly lower than what the street was working with. That's all that we have the time on this leg of countdown though. From Navneet and me and the team that put this show together, thank you so much for watching, but stay tuned because we'll do a complete wrap and analysis of the day's trading session on the Bloomberg Quint market wrap on the other side. Stay tuned.